Hello and welcome to my channel Crypto Avenue. Nice to see you here again. Today another video. We spoke about trends, how trends look, what the definitions on trends are, and today I want to go more into the psychology behind it. That means how trends evolve. Why do trends behave like they behave? And what the market participants behind that are doing. So I drew something here for you. I put out a Bitcoin chart from 2002. And yeah, this is an example, and I want to explain you what happened in these trends, why they happened. And let's start in this phase here. So Bitcoin came down from a price, we can't see it here and it's not that important, but what we see here in this area here is that, I wrote it down here, that the experienced traders are buying higher volumes coming in. You see here the volume is going up and a bottom is built here. Yeah. So what you then see is that the price goes slowly up. And we spoke about it, we defined an uptrend with higher highs and higher lows. What you can see here at the beginning, you don't see any higher highs, but most of the time it starts with higher lows. So you see that we build a kind of triangle. So you see the top line here and the bottom line is steeping up a little bit. Yeah, so we are not in a channel. The dowel line of the channel is going up. So you can see that something happened to the price. And in this phase, which was about 1, 2, 3, up to 3 months, this area, this is the so-called accumulation time. So where the experienced traders or investors buy into their positions, build their portfolio, and what happens then after a certain time, you see it here, it's around mid of June, we see higher volume coming in. And so the price broke through this resistance line here. We spoke about resistance and support lines. So the price broke through this resistance line, and again we have higher volume, so the price is going up again. As we spoke about, that this area is the area of the informed, of the experienced traders or investors into Bitcoin in this particular case. The other participants are on the sideline. So the guys without any position, so the guys who are flat, and unexperienced traders or private people, yeah, they have no position right now. But the point with prices going up is that at a certain time it gets the intention of these people. So they hear about, the price went up again. As we saw here, the price is coming down from an area somewhere, which is not that important now because this is an example, but the price came down and we had this accumulation phase, and then the price went up. You see the higher volumes, you see we broke down through this resistance, and the price is going up. So what is happening then psychologically wise in the people or traders, market participants, which are now on the sideline, which are not invested? Obviously they hear about in social media or somewhere on the news, wherever they inform themselves, that the price is going up, or a friend is telling, or whoever. So after then, they realize, okay, maybe I should get in position. So the trading beginners and private people get attracted from the higher prices and buy in. This would be, you can't spot this area exactly, but it will start somewhere here, and most likely when you are very unexperienced and you totally beginner, newbie, and you're unlucky, what you probably will, you buy somewhere around this area where the price peaked already to above $16. So we came from $5, $5.50, let's say, and went all the way up to $16.35. And within this time, where the price goes up very fast, like this kind of parabolic movement that you see here, the experienced trader, which had their big positions already, try to, or they not try, but they're selling slowly their positions over to the unexperienced, because as you know, you can only sell your positions when there is a buyer. So, and as the buyer's coming in, they sell slowly their positions over to the unexperienced guys outside, so that they gain their profits. And when we have a look on the profit which they could potentially get already, let's say we take the mean of this area somewhere around here, I would say. Okay, and wait, that's not working. Okay, here, and we have a look on how much the potential gains could be from for the experienced one. You see around 219% gains within 73 days, around 2 months. So the potential gain that they could make is 290%. So what I wanted to tell you is that as a trader, you have to think how other market participants are behaving in the market, where they could, or where they went into their positions, when they could sell. So you have to think about what other traders are doing actually. And what you get out of this is that there are more experienced traders which bought already. Let's say you was on the sideline and you started to buy, I don't know, somewhere around $12, and the price started from $5.50 to going up fast. Then you should keep an eye on that. Maybe this price will not double or quadruple or whatever. So be aware of that and try to go out fast. Or yeah, I mean, this is hard to spot. Best case would be if you got the experience already and try to think like the institutions outside. I mean, here are no institutions to Bitcoin yet, but like the institutions in the established markets and futures and options and equity trading. But here you have informed people as well, not institutions, but informed people, informed traders, informed investors. Try to think like they, try to anticipate moves early as they do, and try to get into a movement early so that you can participate as long as the trend is going into your favor. Okay, so the unexperienced go into their position somewhere around here, okay, in this area. What happened then? As the more informed people, traders, investors, or whatever, sell their positions to the uninformed, and there is no demand anymore behind that, because the smart money is out already and so-called dump money is in. What happens? As we spoke about, the price is the rule of the price is driven by supply and demand. As there is no demand anymore and you can't sell your positions to somebody, what happens automatically is that the price is going down because there are no buyers anymore. And this is what happens then here in this area. And I wrote it down here. As the price is not going up anymore because there is no demand anymore, emotions coming in, so the panic, and the price goes down. And maybe we can get the percentage again from the top to the downside. This is the lowest area. So you see the price tanked almost 56%. Imagine you go into this position somewhere around 15 or 16 bucks, and then you see the price is not going up anymore and going down, 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 and you start to panic. The only thing you can think about, I go out by market, just sell my position. I just want to cut my losses, and you end up with losses up to 56%, 57% losses, right? And this within only 2 days. And this hurts. So what happened then? In this area, you see high volume is coming in again, higher volume than here. So the money is distributing from the unexperienced to the experienced. I wrote it down here. As the price is going down, the experts buy in. BTC is distributing from un to experienced. Yeah, this is sad for the unexperienced because they lost up to 57%. And the experienced one, they already made their profits up to 260, more than 200%. So they went out their position, they locked in their wins, they wait on the sideline to see the correction, and then in this correction, you can't really say on which area, but then they slightly buy in, and then we built these bottoms, so the low here, and from there the price bounced back again to the upside. You see still higher volume, so still the distribution from the unexperienced to experienced. So basically what then happened, I drew a kind of triangle, I guess you call it, into here, and you see we had these consolidation time which started mid-August until the end of 2012. So mid of August, 1, 2, 3, 4 months. So now, as I said, we have to get into the mind of the various market participants. So we knew that unexperienced guys burned their fingers, they lost a lot of money. The experienced guys, they know, okay, good, now it's time to buy. We start to accumulate as much as Bitcoins as we can, which they did here. We built a higher high, we spoke about that. We have a higher low here, compare this to this low area here. So low, higher low, we have a high here, then we have a kind of higher high here, slightly higher high, and then we have a beautiful sideways consolidation phase which lasts about 1 month, exactly on 13 bucks, like this former resistance here. As I said, nothing is perfect, but it is in this area, so always keep in mind on resistance, support, and round numbers. And then what happened again? The price starts to go up again fast. Okay, volume is coming in again from the experienced ones, and let's have a look what is happening then. So as you see, the price is going fast. Same procedure again. Price is going up. We broke the former resistance here, which was around $16. And now attention starts again. So it is repeating itself. So the smart money is already in. Less smart money is on the sidelines, doing nothing. They burned their fingers. They lost up to 50% of their portfolio, or of their money that they can invest. What's happened then? They wait maybe longer as they would wait usually. And then you see this crazy parabolic movement here. up to $260. And I didn't wrote that till the end, but it's the same procedure. I will not repeat it here, but you got the point. You got the intention. What I want to tell you is somewhere around here on this beautiful parabolic upline, uptrend, the smart money is selling their positions again to the people which were on the sideline and are not experienced as they are, and they sell their positions over. You see again beautiful volume in this area there. So this is again a distribution phase. Yeah. And the unexperienced traders, market participants, they burnt their fingers again. And this is the reason why most of the traders or most of the new traders, new market participants lose a lot of money because they didn't understand yet. Everybody can learn it. You just have to get the patient, and you have to educate yourself, and as I said, trade and lose. This is the normal way in trading when you start. Everybody's losing money at the beginning. This is completely normal, but you shouldn't repeat your mistakes too often, and you should not lose too much when you do trades which are not that good, let's say it that way. So what you should get out of this video is that you should try to think not just from your perspective, but should think broader and try to be, how to say it in English, empathic maybe. So try to understand how other traders, other market participants are trading their positions. What would they do? Where I am now, in which phase of the trend am I? Is it maybe too late or not? Or if I'm going in, I should have a proper risk management, so trade without stop losses and cut my losses if they are appearing. And by that said, after you did a trade which was going terrible, not in your favor, take a timeout, sit on the sideline, try to analyze what you did wrong, and probably the timing was wrong. Probably you didn't had too much attention on the price action, and basically it was just too late. So be ahead of the other market participants which are coming too late into the market. Try to be 1, 2, 3 steps ahead of them. And I know it is hard because when you had a huge drop here or in the phase before here, and then you just have a long consolidation time, and you probably lost money, you just also lost your trust into it, and you think, I don't care, I will not trade again. But actually this is the time where you should keep watching an eye on it and said, okay, after a major crash or a big consolidation time or pullback time, there will be a consolidation time, and then there will be coming the time where the price is going up. So this is the first thing I want to tell you. Something else that I realized when I went further to the right side of the chart is that we spoke about trends, and that trends tend to go tends to go longer as you think. Think about that now. You go inside here somewhere, you lose your money, you said, okay, this trend was bad, this price will go down and down and down. But guess what? You see, the price didn't went down. We did over 200% on this movement here. We consolidate 50% of it. And look what happened. Look what happened. As you thought this is over, the price went from 16 up to $160. And I will show you how much percentage that is. Look at this. Another 876%. Another 876%. So this is what I wanted to tell you in the video before that I had regarding the trends. Trends could go longer as you think. And this is back in 2012 and 13. And if you thought at that time, oh my God, 160 is way too high and this trend is over, this will crash, go back to $5 or whatever. No, we all know where we are right now, today. Let me have a look. This time I will not mess up the price. It is $7,450. $7,450 today, a couple of years later. I know we had some major pullbacks, crashes, but after every crash, the price went up again. And you see the same in the equity markets. In the US, in Europe, you see it again and again. So don't be scared of crashes or pullbacks. Take your time, wait to get in, to get into your position again. There will be better times. How long they will last, the crashes, nobody knows. But as I'm scrolling to the right side again, look here, we came down from 260 to almost 50, which is round about 80%. Round about 80%. But you see, the price went up again, huge, crashed, consolidated, went down again, went down all the way down to 160. But then look where we are right now. So what I want to say you is keep an eye on the price action and try to adopt to the price action. As a trader, read the tape, read the price movement, look for resistance, look for support, try to get early into the trends so that the chances are higher for you to lock in some profits. I can't go deeper inside this now, where to go in, how to set stop losses, how to get great exit points, because it's too early. I want to evolve this topic slowly, but it's enough for today, I guess. Let me go back. Keep that in mind, and I really hope that you learned something today. This is very important to understand this psychological effects in trading from the different market participants and try to evolve from an unexperienced to an experience. I will try to build the foundation, the knowledge for you. This will take some time. I can't shoot videos every day, but as often as I can, I will build up on every new video to give you the content that can help you grow your knowledge. Yeah. Thank you for listening. If you like the content, please leave a like. If you have any questions or you want to tell me something or you just liked it, please leave a comment. I didn't have any comments the last 3 videos, so I would be happy to see them. Yeah, and hit the notification bell so that you don't miss new upcoming videos with great content. Yeah, I wish you a beautiful day, a beautiful evening wherever you are. Stay healthy, stay happy, and happy trading. See you next time. Bye, guys.